Hey guys, and welcome to the Strategy Lab video. And in today's video we will do the backtest of euro-dollar 1 hour, and the pattern will be 3 drives pattern. Okay, this pattern is a symmetric pattern, a harmonic pattern. It is believed that if you have 3 consequent swings that are more or less of equal distance and more or less of equal time, then you are close to a reversal point. So let's see if it is so. In my previous video I did the backtest of 3 drives pattern on Bitcoin, so you can visit my channel and find that video. Okay, so to accelerate the process of backtesting, we will use the MPS pattern identification software. So let me attach this. Let the settings be default, and in default settings we have 16 patterns generated. We only need 1. Okay, let 1 pattern stay, and then let us set the properties of the pattern. So the name is 3 drives pattern. This specific code, it tells MPS to draw 3 drives pattern. No XABCD patterns, no ABCD patterns, but 3 drives patterns. Okay, the color is blue, the transparency is 0.4, and here are the B point and the C point. Actually they are the first retracement and the second retracement of a pattern. If you will have a look at this 3 drives pattern, 1, 2, 3, 4, 5. So suppose it is this one. Let's label it Y, X, A, B, C, and D point is a termination where the price should reverse. Okay, so the first retracement, which is labeled as B point, it is actually this XA leg. Okay, and the second retracement, which is labeled as C point, it is this leg as well. Okay, so let's do some settings. The first retracement should start at 0.333 and it should end at 1. The second retracement should start at 0.333 and at 1, and the reference leg should be AB. With some patterns the reference leg is AB, with other patterns like Cypher the reference leg for the BC is the XA. So you also should keep this in mind. The D point will be ignored by MPS because it makes no difference. So the stop loss, let us set the stop loss as 2 ATRs above or below entry. So we should type entry ATRs. Okay, and the targets, as the pattern is supposed to be harmonic, then the target should also be harmonic. So if we have the pattern this way, yes, then it should move to the upside at least this distance, the same distance here, the same distance here. So we're supposed to have a harmonic reaction. So let's set this in MPS. So we need the BC leg, and other targets should be 0. Okay, so that's it. Now let's enable this pattern, close properties, and let us start the backtest. Let's go to the first date, so we have some patterns already drawn, and let's create some files. Let's go to open the other folder, MQL4 files. We have Bitcoin backtest file, nothing else. Okay, so let me attach the backtest accelerator, which is called fast backtest utility. Okay, and let me call the name the name of output file is 3 drives. Okay, and let's go here, target 0, 1, and blah blah blah, inverse false, and disable spread. Okay, done. Now it says that it is ready for work. So we have potential paths. We can enable bull patterns, enable bear patterns to make it clear. So the D point is potential pattern completion. So you see here pattern didn't complete, and then we go here. This one it completed on this candle, and it was not a reversal, it was a continuation, so it goes to the downside. Okay, this one undershoots. Okay, this one was wonderful. This one was a loss. This one undershoots and invalidates the pattern before it actually completes. This one is a stop loss. This one invalidates the pattern. This one is okay, a winner. This one invalidates the C point, invalidates the C point. So this one goes okay. Then this one is a stop loss. This one invalidates the pattern. Let us see the price of this. The high 0.213. Oh, it was touch and reverse. This one was a wonderful winner. The second one didn't actually complete. This one was a wonderful winner. Probably we need to test on target 2, target 3 for extended moves. You see the reversals of these patterns. Okay, this one a loss. This one didn't complete. This one was a loss. Hit stop loss. This one is a stop loss as well. This undershoots the entry. Undershoots. Invalidates the pattern before it completes. Okay, this one was almost a win, but then turned to a loss. This one is nothing. Invalidates the pattern. This one invalidates the pattern. This one was a wonderful win, led to perfect uptrend. This one invalidates the pattern. This one invalidates the pattern. This one undershoots the entry. So let me see the bull one. This one is a loss. Bear one didn't complete. This one is a loss. Okay, this one is a loss. This one is a loss as well. One more loss here. Loss on bear pattern, on bull pattern. Okay, the first pattern is a loss, and the second one is a loss as well. Two patterns go side by side. Invalidates the C point, invalidates the C point, invalidates the C point. This one is almost a win, but then turned to a loss. This one undershoots the entry, invalidates the pattern. This one is a loss first, and then it goes to target. Okay, this one is a loss as well. This one is a loss. This one undershoots the entry. Okay, this one reverses nicely. This one is nice reversal. So we tested 3 years already. This one is a loss. This one is a loss. This one is a win. Bear pattern didn't complete. Bear pattern didn't complete. Oh, sorry, we have the first pattern. This one. It actually reverses. Second bear pattern didn't complete. Okay, this one is a win. Not that bad. We have some winners. And what I noticed that those winners are pretty large, so should probably aim target 2, target 3 and blah blah stuff. This one is a loss, this one didn't complete, this one is a loss, this one invalidates the C point, undershoots the entry. Let's go next, invalidated, it didn't complete, this one a loss. The first one is a win, so it starts here. The second one didn't complete, invalidates the C point, invalidates the C point, this one is a win. Okay, this one is a win. This one, let us see if it was 21.56.0, 21.55.0, 1 pip away. 25, yes, it was touch in reverse. It was a win. This one was a win. Okay, continue next. Invalidated. Okay, this one was a loss. This one was a loss. This one was a loss. Should add this pattern into pattern optimizer, so to do the backtest completely automatically. But before I do this, I should study the pattern visually. So when I do the backtest, not only I record the results, I also study the pattern visually. So for now, I have some understanding that this pattern in many cases undershoots the entry. So probably should choose a bit different entry for that. The high 23.39.0, 23.42, none of them complete. Okay, this one was a loss, didn't complete, undershoots the entry, this one was a loss, and probably should optimize targets, because if it works, targets are greater than the initial BC harmonic move. This one is a win, didn't complete. The first one is a loss. The second one, which completes higher, is a loss. Okay, 7 years back tested. Gaps through the entry. Okay, suppose we didn't enter that. This one was a win, greater winner than expected. Okay, the first one was a win. This second one, this one was a win as well, and the third one was a win as well. So if you enter them 1 and 2 and 3 one after another, you'll have 3 consecutive winners. This one is a loss, didn't complete. This one, you see, it spiked to the downside and it was a winner. You see that? So spiking that and then going to the downside. Okay, going next. Okay, didn't complete. This one was a win. Invalidated. It's very important to have invalidated patterns staying on the chart, potential patterns to stay on the chart. This way you can see how often price invalidates the pattern, how often price undershoots the entry, how often price goes to your take profit, to your stop loss, and so on and so forth. So not only completed pattern, but also those that were potential. Okay, this one was a win. Bullish, bearish, bear, undershoot, didn't complete. Okay, this one was a loss. this one was a loss. Okay, this one was a loss. With Bitcoin, the risk to reward was 1.5. Risk in 1, you were generating 1.5. So the target was greater than the stop loss on average. This one was a win, undershoot. Let us see what happens on euro-dollar. With euro-dollar we will have much more patterns as our sample size. So 1, 2, 3. The first pattern is a win, second undershoots. This one, the low says 38.52, 38.47. No, it didn't complete, undershoots the entry, and the second was invalidated. This one undershoots the entry. Okay, this one was a win, second one invalidated. Okay, nothing here. This one was a loss. This one was a win, sharp reversal. Nothing here. Okay, invalidated. This one was a win. Looks nice sometimes, but many losses as well. This one was a loss. Okay, the first one, it was a win, second didn't complete. This one was a win, and the second one was a loss. Nothing here, nothing here. This one was a win. Invalidated first, undershoots the entry, invalidated. Okay, let's disable bull patterns. So we have two bear pattern, one of them completed and the second one didn't complete. Bull pattern was invalidated, bear pattern was a win, didn't hit the stop loss, bear pattern didn't complete, bull pattern didn't complete, bear pattern was a win. This one, yes. Okay, this one was a loss. This one was a loss. This one was a loss. Nothing here. Invalidates the C point. Okay, the first one was a win and the second was exceeding the C point. Goes to stop loss first. Here goes straight to targets. Okay, didn't complete. This one was a loss and the second one was almost a win. Then it goes to stop loss and then it turns back, so it was a win. This one was a loss. This one was a win. This one was a loss. This one was a loss. This one was a loss. Sorry. The previous one was a win. It was a win. Okay. Now let's go to our file and do some changes. Read right pattern. Let me see the time. 12 March 13. 12 March 13. 12 March 13 was a win, and this 12 March 13 should be deleted. Okay, then I save it, and then I close it, and it should continue. I recorded that already. The first one, this one, was a win, and the second one was invalidated. Nothing here. The first one, it was a win, and the second one was invalidated. Didn't complete. This one was a loss. Undershoots the entry, and then it goes to stop loss, invalidating. Second one invalidated, but the first one was not. So it goes to stop loss. The first one. This one invalidates the C, undershoots the entry. Undershoots the entry, but didn't invalidate the C point. So it goes here, and it hits this stop loss. And immediately the second hits the second stop loss. Okay, this one is a win. This one is a win. Nothing here. This one is a loss. Okay, invalidates the C point. This one is a win. This one is a win. Probabilities. This one is a loss. This one is a loss. Second one didn't complete. No completion. This one is a loss. Okay. Oh, 3 patterns, none of them complete. This one is a win. So it looks like that the best patterns appear in these situations when you have an uptrend, then you have this pattern, and then it continues. Probably should look at this environment. So when pattern appears somewhere in this environment, then it should be a nice win. So this one gaps, the first one and the second one is a win. This one is a loss. This one is a loss. This one is a loss. This one is a win. This one is a win. Okay, this one, it is a loss. This one is a reversal. The first one actually reverses to targets, and the second one was invalidated. The first one, it undershoots the entry, but then it completes the pattern. And the second one also completes the pattern, both losers. This one is a win. The second one is a loss. Okay, let me sip my tea. Five years left. The first one is a loss, and the second one is a win. Okay, this one is a loss. Invalidated C point. This one is a loss. Nothing here, nothing here, nothing here. Invalidated. Both bearish pattern invalidated. The first one, it is a win. And the second one is invalidated. Okay, this one is a win. The second one didn't complete. This one is a win, smaller one. This one is a loss, didn't complete. Invalidated, didn't complete. This one is a win. This one is a loss. semi-automated backtest, partially automated. This one is a win, and this one is a loss, undershoots the entry. Okay, the C point is okay, this one is a loss, and this one is a win. Then let's go next. This one is a loss, didn't complete, invalidates the C point, didn't complete. This one is a loss, this one is a loss, and one more loss. And another loss. So we have one more. Wow, the first one is a win. Then goes the second one. It's a loss. Didn't complete, invalidated, didn't complete. This one is a loss, this one is a loss, this one is a win, and the second one was invalidated. Nothing here, nothing here, nothing here. This one is a loss, invalidated. This one is a loss, this one is a loss, undershoots. Okay, both invalidated. This one is a loss, this one is a loss, this one is a loss, and this one is a loss, and this one is a loss, and one more loss. So you guys see how it goes, yes? So if you have a pattern in this environment, 1, 2, 3 drives, and this was a previous uptrend, then it mostly works. But when you have a pattern in this environment, so you have a downtrend and then it goes 1, 2, 3, then you most likely have it this way. So you have a loss, a loss, a loss, and so on. So it depends on the environment of a pattern. Previous movement, this one was a loss, as expected, one more loss, and stop loss, and it didn't complete, and then one more stop loss, previous move. I become convinced in this previous move influence. Okay, so the visual conclusion is that lots of patterns undershoot the entry, and the second is that previous trend actually influences the pattern probability. But we stay objective without these additional filters. We test the patterns as they are. So we found 171 patterns on 40-minute 1 hour time frame. Okay, what I need to do here, I need to turn them to numbers because they have European format. And what I need to do, replace the comma by dot, so they will be formatted as replace all. Okay, done. and then I need to disable y-axis here, y-axis here, and replace it by nothing. Okay, done. Now let's do some calculations. The statistics. So number of patterns. It is calculated by the formula count, and we will calculate the result. Okay, done. 170. Then let's calculate number of winners. Yes, and we'll simply copy this, paste it here, and let's go from 2. Let's count if, and then let's set some criteria, more than 0. Okay, so instead of this, let's choose the whole stuff. Okay, winners 66. Number of losses equals total minus winners. 104 equal to 104. Probability of win equal to this, 38%. Well, almost the same as Bitcoin. With Bitcoin we had 30 something, 31 or 30. Probability of loss is 1 minus this, 61% that we will have a loss. But guys, keep in mind that factor of previous trend. Probably if we only trade those that have previous uptrend, previous downtrend, and we have a bull pattern in an uptrend should work better. Okay, then let's do the calculation of average win. Sorry, average winner, and it is average if within the result range, and it should more than 0. Sorry, something goes average. Average if. Okay, here's the formula. 58 is the average win, 58.2 pips, and average loss is the same as this. Yes, but the formula should say less than 0. Okay, minus 38. Average reward risk ratio, it equals to ABS, sorry, I understand this, ABS this divided by this, 1.5. okay, it stays the same. Well, I like consistency. 1.5, it stays the same. Although the sample size is larger, the statistics actually is confirmed. Not only because this one is Bitcoin, this one is Euro dollar, it is pretty consistent. Okay, the math expectancy. So how often we win multiplied what we win, and how often we lose multiplied what we lose. Okay, probability of win multiplied 1.52 minus probability of loss multiplied 1. Multiplied. It should not be percentage, it should be number. Should go number. Okay, come on. How often will win multiplied average winner minus how often will lose. Looks like okay. Well, this expectancy is almost zero, zero-sum game. So if we will filter losses, these trend losses, we can improve the strategy. And let's calculate the expectancy in absolute numbers. So it equals how often will win multiplied average winner minus how often will lose multiplied average loss. In this case not minus but plus, because we have minus here in the average loss. Okay, and it says that in each and every trade we will lose almost 1 pip. 0.9, almost 1 pip will be lost. As I told you, this is a zero-sum game in this case. If it is traded with limit orders, with no confirmation, with no evaluation of the trend environment, this is a zero-sum game. Plus you will lose your money paying commissions, withdrawal and deposit commissions. You will lose money paying spreads, you will lose money paying swaps, and of course you lose money because of slippage. Although the modern brokers, they provide you the ECN execution. The ECN is very very accurate execution, but still you can have slippages during news events or whatever, when markets are volatile. So you have at least 5 factors when you pay. So your strategy should not be zero, your strategy should have enormous edge only to pay for these 5 factors: withdrawal commissions, deposit commissions, what else, swaps, spreads, slippage. 5. Okay, so you should pay for this, and it should have an additional edge to pay for to actually generate money. Okay, so let us do some sum it up. So we will start from 0 and we will do this calculation. Every time we will plus our result to what we already have. And if we will build this to all this stuff till the end, you see this, then we can create a chart. Charting. Let's insert a chart so it looks this way. Now you see the distribution. It first went to the upside, then it goes sideways, and now it turned to the downside. And so probably, who knows, probably, yes, it can recover from this. Who knows this? Maybe it goes this way. Yes, and overall we can have an uptrend to the upside. We can have a trend line to the upside. But for now we ended with this bottom below 0. We ended up below 0. Okay, here are the results. Hope you guys like this video. If so, give me a thumbs up, share this video on social media, and please comment, tell me what you think, and also tell me what other pairs you want me to backtest, and maybe you want to see the same backtest performed with other swing identification algorithms. The results may change as well. Okay, let me also rename this 3 drive EURUSD. I will name it Prex 6 swing identification, so for me to know next time on some other sheet I will do more backtest with a different swing identification. So I go to save file as, go to my, let's say, computer, browse D backtest, monster backtest, pending orders, 3 drive patterns, and let me save it as XLSX book to save the formulas. If you save it as CSV, it won't save any formulas, so you won't be able to build charts. Let me move it to the upside. Probably I can do it this way. Just cut and paste it back. Okay, here it is. Once again, guys, comment, share, like, subscribe, hit that bell button, and until then, good luck and good trading. Hope to see you soon.